Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good afternoon. Thank you for making time today.
Happy to be here.
Well, all eyes will be on the Federal Open Markets Committee this week, which is expected to raise interest rates by 0.5 percentage point. Some officials have been more hawkish in recent weeks, but there's also uncertainty out there that could lead to signs of them backing off. What do you see happening there, and what will you be watching for?
Okay, well, I think the Fed has been very good at signaling that the May rate increase will be a so-called big step of 0.5 percentage points. The problem is, what will June be like? They have another FOMC meeting at June 14th and 15th, and will it be another big step of 0.5 percentage points, or will it be a giant step of 0.75 percentage points? That, I think, is still not decided. Obviously, it will depend on what the data is going to be for April and May, but still, I think the market will be looking for indication on whether the Fed will continue to operate with big steps and giant steps, or whether they'll back off, worrying about a recession. A comparison in mind is what happened in 1994. The Fed started to raise interest rates to preempt inflation. Inflation was only around 3% at the time, but it seemed like it was going to accelerate. So the Fed preemptively raised interest rates first 3 times at 0.25 percentage points, and then twice at 0.5 percentage points. And then in November, it had a 0.75 percentage point, the so-called giant step, and then another 0.5 percentage point in February. So in 1994, in a space of a little bit more than a year, the interest rate rose by 3 percentage points. And that, I think, is the type of scenario that the market is looking at. I don't think they expect as much as 3% like the 1994, but perhaps the pace will be accelerated like we see here. We're already up to 0.5 percentage points, and if the market doesn't react or the inflation doesn't react, then I think the Fed may have no choice but to go into a giant step. I don't think they'll try it in May, though. They're going to let the big step, 0.5 percentage point, try that and see how that works. Now, the problem for Korea is that if June does become a big step for the United States, then Korea may have to raise interest rates at the next monetary policy meeting as well. Korea has the next monetary policy meeting at end of May. So if it becomes pretty definite that the Fed will raise the interest rate by 0.5 percentage point in June, then the Bank of Korea may have no choice but to raise interest rates for Korea, probably 0.25 percentage point at the end of May.
Well, the big step seems to have been priced into the markets already, but last Friday, stocks on Wall Street had their worst session so far this year, especially the NASDAQ, the S&P, seemingly led by earnings at Amazon and a supply chain crunch at Apple. For the month of April, the NASDAQ was down more than 13%, making it the worst performance for the index since 2008. What's happening in the global markets as we start a new week?
Okay, well, the U.S. stock market has been on quite a roller coaster ride. Last Friday, that's 2 weeks ago, it had the largest fall since the pandemic. Then last week on Monday, it had a modest rise, and then it seemed like the market was recovering. Then on Thursday, we had a fall that was almost as large as what we saw the Friday before. And as you mentioned, on Friday, we had another fall in the market. So for the month, Dow is down 4.9%, S&P is down 8.8%, and NASDAQ is down by 13.3%. For the year to date, Dow is down 9.3%, S&P is down by 13.3%, and NASDAQ is down by 21.2%. So the market definitely is, while it is on a roller coaster ride, maybe one day down, one day up, it is definitely on a downward trend. Part of the reason is that while earnings have been good, they've been mostly beating expectations. 80% of S&P 500 companies have beat quarterly earning expectations, but the earnings are not as good as it was in the first quarter last year, and earnings are not good enough to turn around general pessimism about the rising interest rates. So we may see a continual downward trend in the global markets. Making the problem worse, personal consumption expenditure price index inflation came out last week, and it was 6.6%, highest in 40 years. Core inflation was 5.2%, very high as well. Now, there are some signs that perhaps inflation may have peaked, and this is why we don't know quite yet whether we'll see a big step in June or a giant step in June. But energy prices, they have gone up a bit in the last week, but on general, from March, they have been on a downward trend, and that's due to lockdown in China and economic slowdown in China, which is now spreading globally. And the U.S. GDP, surprisingly, recorded negative 1.4% annualized growth in the first quarter, even though if you look at the numbers, that the domestic demand for America still remains very strong. But still, the numbers seem to indicate that for the near future, short term and medium term, the Fed will continue to raise interest rates. Now, for Europe, they had a fairly good week last week, but because they had some good earnings reports, but today they seem to be following the U.S. trend. The DAX and CAC are down, but London is closed today. Asia, Shanghai and Hang Seng are up. Nikkei is down a little bit, and that may be because even though China is suffering a shutdown and slowdown in growth, that Chinese government has indicated that they will engage in expansionary policies, including investment in infrastructure.
Right, and now here in Korea, stocks closed lower today, but a much more subdued decline than we saw last Friday in the U.S. Still, there are concerns about the effects of the lockdowns in China. You mentioned investors watching the Fed here, too. The exchange rate also seems to be a key factor for the local market. What's the story today in Korean equities? And amid all this volatility, what's your outlook for the month of May?
Well, as you mentioned, it's been a very volatile week last week. It was up and down, a roller coaster ride. We had 4 days of more than 1% movement. Of those 4 days, 2 days were up, 2 days were down. So we're basically going up and down, but perhaps not moving too much. Today, the market today, Kospi fell by 0.28%. It ended today at 2,687.42. Year to date, Kospi is down 10%. Individual spot, institutions and foreigners sold. And for Kosdaq, again, up and down last week, but to a greater scale perhaps. The movements on last Monday was more than 2% downward. But for the week, it ended about 2% down where it was the week before. Today, they ended down 0.32%. It ended today at 901.87. Year to date, Kosdaq is down 21.3%. Individual spot and institutions and foreigners sold.
Got it. All right, Professor, we'll have to leave it there for today. Thank you, as always, for your insights. We appreciate it.
Thank you.